Available homes drop fast. Welcome back, everyone, to my Monday market update. In this episode, I am going to report to you a lot of important information about the Arizona housing market and also compare it with the national market data. Specifically, today we are talking much more detail about the balance between supply and the demand in Arizona market as of today, August 25. With that, let's dive right into the information. Okay, so here is the data. All right, so what we observe, what we've been seeing is that based on the comfort market index, and for those of you who follow my channel, you're already familiar. The market comfort index is created by Comfort Associate, and they basically tell us what's going on with the market based on one number. If it is more than 110, it is a seller's market. If it is from 90 to 110, it's a balanced market. And if it is less than 90 point, it's a buyer's market. We know that a lot of cities actually in the buyer's market right now. But what we also see for the last couple weeks, actually 6 weeks in a row, that we see an improve of comfort market index. When I say an improve of comfort market index, it could be from 97, and then next week it's go up to like 100, and then next week it's go up to 110. Okay, and we track those changes. As of right now, we see, as of today, this week, we see a 9.3% month increase over, a 9.3% point increase. Now, at first, it may feel like, okay, it's not much, okay? But if you remember, last week it's 8.4%. In the previous week is 6 point something percent. And the previous week, I don't remember exactly the number. But my point is that every single week now we see a more positive improve for the comfort market index. What this means, supply is continuing to fall while the demand is gently rising, okay? Pushing actually more cities toward the sellers. In fact, we have 14 out of 17 cities in Arizona, in Maricopa County, actually show an improve toward the sellers. When I say toward the seller, that means it's getting closer to the point 110 or even higher. Okay, the only two cities that actually less favorable to the seller is Tempe, which is -7%, and then Maricopa at -3%. Okay, the Goodyear area is stable. There's nothing changed. There's nothing up. Okay, according to this chart, you also see that Fountain Hills now become the number one. Okay, actually this week is become number one of 28% improved toward the seller. So let's say if the comfort market index of Fountain Hills is actually, let me see real quick. Let me get that data for you right in here. Okay, it's actually right now 137 points. 137 points. That means it is already in the seller's market. Okay, when we talk about a seller's market, we actually see that the seller has more negotiation power than the buyers. And generally, that happens when the supply drops. Okay, next one is Cave Creek, is about 25%, actually 26% improved, now at 123 points. Scottsdale is at 24% increase, now at 118. Okay, Paradise Valley still top of the chart. Now the improve is only 18% here, but it's actually 196 point. Okay, 196 point. Okay, we're talking about a lot about the luxury market, but we also have Chandler 121 point, Glendale 106 point. Avondale is 111. This is also 13% increase compared to the previous months. Gilbert, 13% increase as well, now at 100.4. Now, it is not the seller's market yet, but it's moving there. Okay, so obviously you see, like I said, 14 out of 17 is increasing toward the sellers, and mainly because of the supply. some of you might ask, how bad is it? Okay, how much of the supply has dropped? And that's exactly what I'm going to show you next right here. In front of you right now is the number of active listing, which is also represent the supply of available houses in Maricopa County. You see, each of the points represent the number of listing, active listing available for sale every single week. Okay, we are right now at week 34, and the amount of available listing is 20,717. That has been a decline since week 18 or 19 of the year. Okay. At the beginning of the year, we only have about 18,000. We start increasing to week 18 and 19 about April, right? And then we have been seeing the drop in supply. Okay. Now, the drop in supply does not matter if there's also a drop in demand. But recently, this one, in the other hand, is the chart of the demand, represented by the number of listing under contract. Remember, this is only listing under contract. Okay, so those are the buyers that actually put in an offer and getting accepted contract, right? We cannot measure how many available are there in the market for real, okay? But at least this is showing the number of the demand. And we see that actually there's an increase since week 27. Okay, so since week 18, we see a number of supply, there's nothing changed. Yet the comfort market index is still favorable to the buyers because the demand at that time is also dropping. But starting from week 27, which is about 7 weeks ago, right? We see that the demand is actually going up. There's a dip here, but then it's go back up right away and it's pick up fast, right? And that is the reason why you see the comfort market index increase towards the sellers. Because when the supplies drop and the demand goes up, that is a very good indication of the price goes up again. Right now, it's not yet, okay? But I'm sure if there's nothing change in the future, the market could flip very soon, okay? So as of right now, we see that only six cities that's in the sellers market. Notice that only two very fair, very weak. Okay, that is Avondale and Scottsdale, only 111 and 118. Okay, point. Four cities that in the balanced market, which is Glendale, Phoenix, Gilbert, and Mesa area. Those are the one that the buyer and the seller both have the negotiation power as equal. Okay, buyer's market at the rest. Maricopa is still the worst. Buckeye is after that. Okay, so if you thinking about for sure getting the right deal, and if you don't mind traveling, Maricopa and Buckeye could be a good option for you. Okay, so that's enough about Arizona. So let's look at the national market. Okay, what is going on right now? Okay, obviously we see that as of right now, the Phoenix area, the Phoenix, Arizona has dropped. Okay, is a buyer's market overall, right? Even though we're talking about moving back to the seller's market, but it's still officially a buyer's market right now. What is going on with the rest of the country? According to Zillow, and then this is KCM, okay, keeping current matter. This is also very reliable real estate data in the national level, okay. Seller in these cities are still have the most power in place. That means they have the strong negotiation power, and most of them is in New York, Ohio, and those Illinois. Those are the cities that in the northeast or middle west of the market. On the other hand, if we're looking at some the market in the south or in the west, including Florida, Georgia, Alabama, and Arizona, right? It's not in here. It's not the worst, right? It's like the buyers do not have the most power in Arizona compared to other cities here, right? We're talking about Florida. We're talking about Decatur. We're talking about Forest City. Florida have four cities right here. Okay, so those are the cities, those are the states that the buyer has the most power as of right now. Okay, Secondly, it's not only number one, we not only that the power dynamics are different between states, between cities. We also see that home price actually different across cities as well. Okay, toward the left of the chart right here is the cities, the state that has an increase in home price. Surprise, surprise, right? You might be surprised because you know why? I have been reporting the number of Phoenix, Arizona market as a negative trend. Okay. Um, so you think that the entire country has a negative, but it's not, right? So if you're buying a house, for example, in Ohio, Cleveland, Ohio, you're expecting to pay more because it's actually increased 4.2%. Okay, so according to this chart, then the home price also different. Okay, nationally though, prices rose about 55% over the last 5 years. Okay, that's a long run. It's a long run. This is year over year. Okay, now in the top 50 metros area, the picture is split half and half like this. This is the top 50. Okay, now, the second notice that we see here is that even if these cities are declining, okay, including Phoenix, Arizona, yes, most of them is about 3 or 4%, 3 or 4%, which indicate an adjustment, not a crash. Okay, a crash only happens when everywhere reduce, and it's going to be 20-30%. This is absolutely not a crash. When we look at the number of home price, we see yes, a reduction for Phoenix area, but it's only about 3.5, 3.3% year over year. Okay, the worst is in, according to this chart, is Austin, Texas, only 5.7%. Okay, so it's definitely not a crash. Okay, finally, let's look at the mortgage rate. This chart right here represents the mortgage rate. It's very go up and down. If you think, why is it not a smooth, beautiful line? Well, because it is not, right? Rate have been moving in, but however, though, starting in November 24th and 2024, as you see here, the rate doesn't change much outside of the 6.5 to about a little bit above 7 for the entire from November 2024 until now. Okay, and this actually, according to Freddie Mac, is one of the most stable period in the recent history. As you see, it's go up, it could go down, it could go up again, go down again, it goes up again widely. Okay, but in here, for the last several months, we see a very stable interest rate. That means more predictability for both buyers and sellers. And that means more and more in my opinion, more and more buyers getting adapt to the 6.5%. Even though it's still high, but more and more people get familiar with that and they accept it. And they're coming back to the market. And that's shown on the demand chart, right? So at the end of the day, those are all the information I don't want to show you. But my point is this: if for those of you who are still waiting on the side, okay, and waiting for the interest rate to goes down, you may be late. You may be late to the game because the buyers who are acting right now, who are looking right now, already familiar with the market and they know what they're supposed to do, okay, to get a good deal, to negotiate on price, to negotiate on closing costs, to get a lower interest rate, even though the current market is about 6.5, right? So those buyers already adapt those information and then they practicing right now. So if you're still waiting and then waiting for the market to goes down, you may never see it and you may be too late to the game. For the seller, even though it shows some of the signal that is good for the seller right now in Arizona market, right? You have to be patient with this market. You cannot rush. You cannot just sell the house doing nothing and expecting the highest return on investment. You have to do some research. You have to find out what you need to do and bring upgrade the house, prepare the house in a better, do as much marketing as possible. If you only rely on the agents that putting your house onto the MLS, period, you will not be able to sell. You have to have the right marketing strategy. And hey, by the way, if they just post on social media, is not enough as well. So my point is that seller, be patient, be flexible with the price, and have the right expectation on how your house getting market in this market. Thank you so much, everyone, and hope to see you next time. Bye-bye.